Hello everyone, and welcome to today's webinar on how substantial tax savings can be made by businesses like B&Bs, guest houses and hotels through capital allowances. This morning we'll explain in non-technical terms what capital allowances are and how your property might qualify for future savings and perhaps a tax rebate too. We'll also look at real examples of businesses like yours who've actually saved tax, thanks to Eureka, the business run by my guest today, Jason Batty. My name's David Weston, and I chair the Bed and Breakfast Association, the UK trade association for B&Bs, guest houses and small independent hotels. We're a non-profit membership body with no shareholders, whose only purpose is to inform, support and represent our members. And our subscribing members qualify for a range of benefits, one of the latest being our purchasing group, launched in April, which gives members a range of discounts on suppliers. It's a way of pooling our buying power to help members save on their business costs. And this webinar today is another example of our mission to help B&Bs and guest houses save costs and tax and improve their businesses and their profitability. This webinar is being recorded and can be watched again from the B&B Association's webinars page. Everyone who registered will receive an email from us with a link to the recording and the contact details of Jason at Eureka for those who want to see what they could potentially save. If you have a question, do post it in the Q&A section. We may not be able to reply to every question during the webinar, but we'll try and answer any outstanding questions in the follow-up email to you or on our webinar page. So let's get started. My guest today is the capital allowances expert, Jason Batty of Eureka Capital Allowances. Jason, do you want to firstly introduce yourself?
Yes, thank you, David, and welcome everybody to today's webinar. A little bit about myself. You just soon know by my accent, I'm based in sunny South Wales. Been located here for a number of years, besides my university years where I studied in Liverpool. When I left Liverpool University, I became a mortgage advisor. So I've always been involved in property in some way or another. Set up the business regarding mortgages, directly authorised by the FCA for a number of years, helping residential and commercial properties nationwide, until around about 5 years ago, when a friend of mine and myself established a capital allowances company. We saw that the capital allowances market was ripe for opportunity, and we set up a company whereby we were helping businesses nationwide, offering a very special service. I'll come on to Eureka shortly, but Eureka is a relatively new entity, but we've got a team full of experience where again we're helping B&B owners as well as other sectors nationwide unlock substantial amounts of tax relief, which most owners are unaware of. And we have a real passion for helping businesses.
Thanks very much, Jason. That's great. Now I'll hand over to Jason to go through a brief presentation, non-technical, but to explain to us what capital allowances are and how businesses can benefit, and show us a few actual examples of B&Bs who've benefited from Jason's professional advice. So Jason, over to you.
Okay, let me try and share my screen a second. Here we go. Okay, bear with me a sec. Here we go. Okay, so there is a Q&A section where you can obviously write any questions you have, but we can also deal with that at the end also. And you can contact me after the webinar if you like. My contact information will be provided on the final slide. But I appreciate the subject of tax and capital allowances can be off-putting for some, but hopefully over the next whatever given time, we can add some value and help. You know, I'm sure that nobody within watching this webinar is immune to what's going on with the economy at the moment. Rising costs, fuel and everything else is really having an impact on businesses. So hopefully there can be some value to be taken from this, and we can ultimately save you money, and that's what we like to do. So a little bit about Eureka. As I mentioned, we're a relatively new entity. However, we've got a team with a wealth, depth of experience and expertise in the field of capital allowances. It's a relatively new industry. Capital allowances isn't, of course, but in terms of independent consultancies, it's a very, very small industry, and but we've got a lot of experience within that. When we created Eureka, the idea was we could see that a lot of businesses were missing out. A lot of our competitors and a lot of capital allowances specialists, they'll only target your big firms with, Weatherspoons and whatever big chains, and the smaller to medium businesses were missing out. So we wanted to create a service that was more accessible, more hassle-free, and more cost-effective. So Eureka was born out of that. Our mission is to help businesses nationwide, and we've got a real passion for doing that. We've got a team of surveyors, capital allowances experts, and sales professionals. I can't say I'm one of the technical gurus, they're few and far between, but we've got a team of technical experts that can offer the best advice for you and your business. Over the years, the team have helped thousands of commercial property owners, and we've got unrivaled success in the hospitality sector, as you could see from some of the trade associations at the bottom right of the screen. We partner with the B&B Association. We're very proud of that. We're trade suppliers for the Scottish Self Caterers, as well as associate members of the BH&HPA, the holiday parks, and the Scottish Tourism Alliance. So, we've really established ourselves as the trusted capital allowances consultancy within the hospitality sector. And we continue to do so. It is a sector which is widely overlooked when it comes to capital allowances claims. And I'll go on to that a little bit more shortly, but their opportunities are ripe. And we know that as a sector, a lot of hospitality has been missing out. So it's our job to help people find that Eureka moment and to steer them towards some tax savings and welcome cash rebates. Hospitality is the core of our business, but we've also worked with doctors, dentists, nursing homes, nurseries, you name it. But the B&B market is one that has been widely overlooked, and that's where we can really add value and help. So that was a bit about who we are, a little bit about what we do. I mean, quite simply, we can unlock tens of thousands of pounds in tax savings and cash rebates for B&B owners. And we do this nationwide. And we do this by identifying unclaimed capital allowances tax relief on something named as fixtures, which are within a B&B property. And I'll come on to that, what fixtures are shortly. But first of all, a little bit about what capital allowances are. Most people are familiar with capital allowances. You can claim capital allowances on items which are essential to running your trade. And it was something introduced by the government a long time ago to incentivize investment, and it's your right to claim capital allowances on qualifying apparatus or fixtures, plant and machinery, and it's a way of reducing your tax liability over time by claiming on these qualifying assets. It's essential. You can only claim on items which are essential to your trade, and I'll come on to those in the next slide. But ultimately, it's a way of legitimately reducing your tax liability for years to come. And now an accountant, most people will say, well, my accountant can claim capital allowances. And that's quite right. A lot of accountants can claim capital allowances, but they'll claim on the most basic and obvious expenditure, or there's two sort of opportunities when it comes to capital allowances claims where we can help. And the one are named cost claims and the others are named purchase claims. Now, a cost claim, without going into too much detail, is, for example, where you, as a B&B, you've just put a new boiler in, you give the accountant the cost information, they've got the receipt for the boiler, potentially they might claim capital allowances on the boiler. But where a capital allowances consultancy will differ will be where we'll look at the boiler, we'll look at the pipe work, the paint work, any labour costs, we'll look at the bigger picture and make sure that every pound has been analysed to make sure that you fully maximise any capital allowances claims. So we're not here to I just want to be very clear before we go further into this. We're not here to do your accountant's job or to take any relationship away from your accountant. It's working with your accountant that we can really maximize any capital allowances claims. However, on a regular basis, when we look at cost claims, which is any expenditure that you've incurred, we regularly see that not everything has been captured. So we can review any expenditure and make sure any claims that a claim has been fully maximized. We see it on a regular basis, just the basic stuff is usually claimed on, if at all. But the one thing I wanted to speak to you about today, which is one of the best kept secrets, the most overlooked, are capital allowances purchase claims. Unbeknown to many owners, when they actually purchased the property, they were entitled to claim tax relief on items that were already in the property when it was purchased. So I just spoke about cost claims, which was obviously things that you might have added since acquisition. Unbeknown to most, you can claim on items that were already in the property when it was purchased. So things like the heating system, ventilation system, kitchens, bathrooms, telecommunications. This works out that between, when it comes to a bed and breakfast, typically between 25 and 30% of the purchase price that qualifies for this tax relief. So we're looking at things that were already in the property when it was purchased. Now, this is a specialist area, and this is where an accountant would, I would say they can't make the claim. They could make it, they could take a stab at it and put a guess on the value of these fixtures. But essential to making a capital allowances purchase claim are surveyors. So we have a team of surveyors which will come to the property and at no cost and put a value on these fixtures. If the property was bought 10, 20 years ago, if you bought your property 10, 20 years ago with these items already in it, there's no cost information for it. You know, you need a surveyor to go to the property, spend a little bit of time there, usually half an hour, depending on the size of the property, to work out the value of these fixtures 10, 20 years ago. If you know, this is what differentiates, you know, using a capital allowances consultant to just an accountant having a stab at it, but typically they won't when it comes to a purchase claim. This is what makes it very specialist claim. When it comes to what qualifies, the analogy that, you know, people make is that if you've got your B&B, a giant comes along, picks it up, gives it a shake, anything that hits the floor, the loose fixtures and fittings, etc., an accountant can typically claim on that. But anything that was behind the walls, embedded to the building, any fixtures embedded within that building, you're entitled to claim tax relief on. So that's what we would look to claim on. As I say, it's usually between 25 and 30% of the purchase price, which our surveyors would identify.
Jason, can I ask a quick question?
Sure.
When you're talking about the capital allowances embedded in a building and fixtures and fittings, what about the fact that a lot of B&Bs are a mixture of residential and the business? They're the owner's home and family home and a B&B. Is there a sort of way you prorata that between the business and the personal side, or how does that happen?
No, if they live on site, if you like, and it's their dwelling and they live within the building, the whole building still qualifies. So that to answer that question, if, for example, we do work with in retail sometimes, and you know, they have semi-commercial, residential. If it's not owner occupied, then you know, you can only claim on half of the building if it was 50% residential, 50% commercial. However, if the owners live on site, the whole amount will be able to be claimed on. To answer that, Dave, hopefully that clears that.
Thank you.
That's fine.
Yeah, thanks,
yeah.
Jason.
But yeah, feel free, any more questions, just jump in. But yeah, so the dwelling, the full building would qualify in that scenario. And if you look at the apparatus of trade on there, the fixtures on there, you know, these are all essential to running the business and running your B&B. You know, you make some very interesting TripAdvisor reviews if you didn't have a kit bathrooms and so on, and electric and heating in your bed and breakfast. So you're entitled to claim tax relief on all the items you can see on your screen there. In the last 6-7 months, we've identified about 11 million in unclaimed capital allowances. that goes across our whole, our whole sectors, including holiday parks and so on, whereby in certain sectors you can actually, there's more to claim on, but it goes to show the amount that that figure has been missed over the years. And I'll come on to some of the reasons perhaps why shortly, but ultimately, there's lots of opportunities out there, and it's being missed. So they're all the fixtures that we can claim on within a bed and breakfast. And just to show, just don't take my word for it. Colebrook is located in Farnborough. It was purchased in 2006. When we spoke with them, they'd not really heard of the service before, and they had a very reputable accountancy firm, and they've not heard of Capital Allowances purchase claims before. When the surveyor went there and then worked with our consultants in-house, we identified 27% of the purchase price, I think that was, in unclaimed capital allowances. So the unclaimed capital allowances, referring back to the previous slide, were the fixtures you could see there. What this gave back to the client was close to 40,000 in tax savings and a £9,000 cash rebate. The tax savings is not a pool that you can use all at once, unfortunately. If you did have a £39,000 tax bill in Jan, it's not a way of saying I could reduce the full amount. But in this scenario, up to 18% can be used. 18% which can be used now on an annual basis from that pool to reduce the tax liability until that pool is used up. So it's a means of reducing your tax liability legitimately for many years to come. The cash rebate, that depends on the amount of tax that the owners would have paid in the previous tax year. So there's a ceiling on that. But it's probably a good opportunity to really point out that the cash rebates, we don't charge any, Eureka don't charge any upfront costs. So the cash rebate typically covers any fees by us, and there's usually surplus. It depends on how much tax was paid, but I think the real value is reducing the tax bill for years to come. But just to point that out, that there's usually a cash rebate as well for owners, which, given the current climate, could be welcome for many with cost of living, etc. Bedrule was another B&B. This is based up in, I believe, the Scottish Borders area. This was purchased in 2017 as an ex-residential property, converted into a bed and breakfast, and they actually, everybody was affected by COVID, but the restrictions were lesser or near the Scottish borders. They actually did well over that period, and considering the time of year that they transferred it to a B&B, but nonetheless a very good result. Identified 186,000 in unclaimed allowances, 74,000 they can use to reduce their tax bills for years to come, and a £70,000 cash rebate. It was, as I mentioned before, what comes up quite often is it was a residential property before, so it doesn't qualify. But now it is a trade, it's being used for trade, it's a trading activity, it qualifies for a capital allowances purchase claim. We usually get one of our probably biggest pushbacks or from clients is the assumption that, or they say, why haven't I heard of this before, is usually the first thing. And well, a lot of people have heard of it before, but for the wrong reasons. There's a lot of companies out there would just get bombarded, especially B&Bs, with cold calls, and they discredit cold calls because you get a lot of nuisance calls. But nonetheless, it's not the sort of thing that HMRC shout from the rooftops, because they know that legally people are entitled to make this claim, but they don't advertise it, and that's why a lot of people have not heard of this before. And another reason is that it's just not been accessible for a lot of businesses over the years, because of other capital allowances, independent capital allowances consultancies have really sort of, they've only been targeting the bigger ticket properties and so on and so forth. So it hasn't been accessible. But obviously it is now. So a lot of people have not heard of it for those reasons. But accountants, coming on to accountants, as I say, accountants could be the gift and the curse for us. We work with a lot of accountants. They're probably the biggest referrer of business to us are accountancy firms. However, we do get pushbacks from accountants. A lot of them, because it is quite a specialist area, they might not be familiar with it, or they might think we're trying to take their clients. So I'd just like to really reiterate that we want to work with accountants. We don't want to do their job. We don't want to take you on as an accountancy client. You know, we can, when it comes to submitting a claim, we give the client the option. We can either amend the tax returns and get the accountant to submit it, or we can get your accountant to do that. That's up to you, but we want to work with them to do that. But ultimately, why an accountant can't claim, it is a very specialist service, as I mentioned before. In terms of making the capital allowances purchase claim, surveyors are essential to this. You know, you need to get surveyors to look at the property, and accountants do a tremendous job, but they're not qualified accountants. Sorry, they're not surveyors either. You know, just they're already spinning enough plates without doing that job. So that's our job. We'll go and survey this property to make sure that everything works, and we'll make sure everything fits before it's submitted. And we do a lot of background checks on the property also. So you need surveyors to make this claim. And when it comes to cost claims, you know, reviewing the cost information, you know, we specialize in that. We've got a team that do that. So the accountant, where they might have claimed on the basic expenditure, will review it all at no cost and see if there's anything else that we can look at on behalf. Legislation comes up quite a bit with accountants. That upon the sale of the property, they might have to give the capital allowances back, or it affects capital gains tax. And this isn't true. There's legislation we can point the accountant at to guide them on this. It's the biggest misconception we probably hear from accountants, those that aren't too familiar with it, is that it does affect CGT, but it's simply not the case. Fixtures legislation is a little bit different to normal plant and machinery. So there's some of the reasons why. And we get this quite a lot of, have I already claimed? Well, if you can't recall ever meeting a surveyor at your property, you can't recall receiving a capital allowances valuation report, and these things are pretty detailed. You know, there's a good few pages of numbers and breakdowns and methodology and so on and so forth. You remember receiving a capital allowances report if you've ever made a capital allowances claim. So if you haven't seen a report, you haven't seen a surveyor, and you haven't benefited from, as what you could see in some of the previous slides, and future tax savings or a cash rebate, it's highly unlikely that this claim has been made. So it's worth exploring further if you haven't, as you can see from the results that we've achieved. So who can claim? B&B owners or any commercial property owners who purchased for over £150,000. Ideally, you must be paying tax. You know, I mean, if you pay tax, you get a cash rebate. We do have clients that say, well, they haven't paid tax. They might be in their first couple of years of trading and there's no profits as yet, but they still might want to go ahead and they buy the allowances for future years so they can bank them. But ideally, the more tax you pay, the more cash rebate you get back. So ideally, that's the case. For the purchase claims, we don't make the rules, but there was a Business Act, I believe, 2012, which they tried to sort of curb the amount of claims being made. So they said that anything bought after 2014 is a little bit more complex. Anything before 2014, pretty straightforward from our point of view. But anything after that's a little bit different. If the property was formerly a resident, bought as a residential, however, or bought from a non-taxpaying entity, pension fund, or a share acquisition, there's still scope to make a claim. But I think it's just worth having have a conversation with us to see if it meets criteria. You know, we can line that out fairly quickly. And those who have spent over 50,000, we can review the expenditure and analyse any pounds to see if there's an opportunity there for you. I don't want to make any of this sound complicated by saying these are rigid criteria. It's worth a conversation with us. I mean, in terms of the client journey, we've really streamlined the process to make sure that, you know, our business model allows you to do your business. So, you know, all we require from any owners listening today who want to have a chat with us is, all we require are just let's have the initial consultation to see if the property qualifies and you qualify. Then we can provide you with a bespoke proposal, which will give you an indication of what you're entitled to, cost, and so on and so forth. If you wish to take this further at that point, and most people, when they can see the figures, they do, then we'll take it out of your hands from there. Let us introduce us to your accountant. We can have a chat with them, and we can liaise with them. Or if you haven't got an accountant, all we require from you is let's have a look at your tax returns to see, to work things out, see if you do qualify, and what your cash rebate could be. And we need access to the properties to survey it. If you're extremely busy, we can offer a desktop survey, but that's the only involvement we require from you as an owner, introduction to your accountant and access to the property to survey it. Our team will do everything else. So, we just try to make this as simple and hassle-free as possible for you. So why use Eureka? There's no upfront costs. We don't even charge for the survey. There's a no obligation review. We don't take up much of your time for the review at the beginning. It's a fact find whereby then we take it away and we do all the rest of the work. We look to work with your accountant, not against your accountant. We don't want to take that relationship away. Only by liaising with your accountant can any opportunities be fully maximized. And as I said before, our business model allows you to focus on your business. So we're going to work together with you and your accountant. We've identified a lot of money for commercial property owners nationwide. We've got years of experience as a team, and surveying experience, and this allows us to optimize any capital allowances claims and make sure that you get the best return. We've tried to make this as easy for you as possible, and your accountant, we will find more, and we not just a flash in the pan. We don't just make the claim and just go. We'll review every year. We'll have a chat with you, see if there's been any more expenditure you want us to review, ensure that all the allowances are being used properly every year to make sure that you're benefiting from years to come from this service. And finally, tax and capital allowances is a complex area. We make sure everything ticks all the boxes. Up to date, all our reports and findings, everything has been agreed with HMRC. If there was ever an inquiry, we would deal with that on your behalf. But ultimately, we don't sail close to the wind. We make sure everything is covered and everything's right before anything is submitted to HMRC. And I think that is my final slide. My contact information is there if anybody wishes to contact me. Feel free, give us a call anytime, add me on LinkedIn, any questions, feel free. And if you wish for any further case studies or anything like that, obviously contact me. But I think, David, that's me. I think that's me wrapped up. I think that might be enough for some people of the subject, but that's it.
Thank you very much, Jason, for that. That's really interesting. We've had a couple of, we had a question from the Q&A, and I've got a question. Simon on the Q&A has asked, does this only apply to freehold properties? Some B&Bs are leasehold. The people who run the B&B have the property on a leasehold basis. Can you say a bit about that?
Yeah, sure. So okay, it's a case-by-case basis. We're better off having a chat with the gentleman who mentioned the question. But if if the lease was taken out before 2014 for over 150,000, then it would still, before 2014, over 150,000, it should still be good to go to answer that. But again, they're more complex for the leasehold from our point of view, but we just have to do a little bit more due diligence on that particular property and check that the freeholder hasn't made the claim before and so on. But that's our job, not the clients. Great, thanks. If you could stop sharing your screen, Jason, then we could go back to normal. Yeah, that's great. Thank you. The other question that occurred to me is about, is this a totally separate thing from depreciation? People might think, well, in our accounts, we've depreciated these assets or the various assets, so we may have already depreciated them down. Does that mean that you've reduced the capital allowances, or is that a completely separate thing? Well, if, for example, clients already claimed capital allowances on certain items, we would simply just restrict it from our claim. So we do get that quite a lot with holiday parks, where they might have completely, changed certain fixtures, but we can just find out that from speaking with the accountant what's been claimed on, how it's been treated for tax, and simply remove that from the claim. It reduces the percentage, but ultimately there's still a lot to claim on when it comes to a purchase claim. So yeah, it's a case of speaking with the accountant, seeing what's been claimed on, what's not been claimed on. In some cases, things go in the profit and loss, but that's not for the client to worry about. That's something we'll speak to the accountant about and deal with.
Thank you. So it sounds like from what you're saying that most, I mean, obviously not all, it depends, but most B&B properties could get some tax back, because most would have been bought for more than £150,000. There'd be embedded assets in it, as you showed us. That would be very typical. So a lot of our members, for instance, might find that yes, they could benefit. So would be worth taking it forward with you.
Absolutely. You know, as I mentioned, there's no upfront costs. Have a chat with us. You know, we know that this is a sector which is widely overlooked, and there's plenty of opportunities. There's no better time. We can offer you a proposal. Take a look at it. We don't do the hard sell. You wouldn't have heard of us from cold calling and things. I think that's what's put a lot of people off over the years, is that bombarding with that side of it. But you know, we're building a reputation through referrals, trade associations, but it's getting the message out there, and it's this means of today that we can do that, but it's widely overlooked, so there's plenty of opportunities out there.
Thanks, Jason. I mean, yes, that's what we're trying to do, because as you say, a lot of people are bored by very technical subjects, financial subjects, but you shouldn't be, because if you're running a business and you can make some money back or save some tax, then obviously that is something that's very well.
David, I think you might have accidentally muted yourself there. Oh, there we go.
Sorry about that. So I ask the question again. Sorry, we've had a question come through on the Q&A. How far back in arrears can you go in making these claims?
Well, we can go back. I mean, claims can be made 20, 30 years ago, providing it still meets the criteria of purchase for over 150,000. Obviously, if the place has been completely gutted and it's been all the fixtures have been changed, we would need to review that, look at fixed asset registers and so on, and pull that apart. But there's no date there, to be honest, going back. You know, in the past, we've made claims on properties purchased in the 70s, so we can go back quite far.
Okay, thank you. And Stuart has asked, what happens if the property was maybe bought 15 years ago, and since then lots of things have been replaced and renewed? I'm guessing the answer will be that's even better, because you've got records of replacing assets. But what's the answer to that one? Yeah,
so scenarios like that, we make the call whether it's more worthwhile for the owner looking at a purchase claim or a cost claim. So we'll see what would give back the most. So if we're looking at a purchase claim and there's been a lot of work that's been carried out, let's see how that work was treated for tax, if treated at all. So there's the option of claiming on the originals or the new. So it's a case-by-case basis. We'll work out what's been spent and the value of what was there before and the value in making the claim. So hopefully any work carried out will have cost information that we can review in that scenario.
Thank you. And we've had another question. If you can explain, for transparency, I think you did touch on it, how Eureka make their money. Is it just for commission, or is there a fee on that the B&B has to pay? I think it's a no-win, no-fee commission basis, isn't it, basically?
Yeah, I mean, we charge a percentage of the unclaimed allowances we identify, which is industry standard. We do charge less, you know, we're more cost effective when we have a relationship with obviously the B&B Association. So we charge 3% of the capital allowances that we identify, as opposed to 5% plus with most firms. So there is an offer there. But we can fathom from looking at tax returns what the cash rebate is going to be, and it makes sure it covers our fee, and we can be flexible where necessary. So we don't like to see anybody out of pocket, but ultimately the value is going forward. You know, the tax savings dwarf the cash rebate going forward.
Yeah, and people can see what they're potentially going to save before they sort of agree to going ahead with it.
Absolutely. Yeah.
And just for full transparency, also the Eureka kindly support the B&B Association with a small part of what they earn from transactions. So if you do go ahead and Eureka identifies savings for you, then not only do you gain, but the B&B Association gains a little bit as well, which helps us keep our membership subscriptions down. And that's a good thing too. It doesn't mean you're paying any more than you would have been. It's just it comes out of Eureka's commission on that a bit for the association too. So that's good. I think we've had one more question coming in since. Richard asks, over 25 years, we've developed a group of derelict barns into a large B&B. Can we claim purchase price of 79,000, but over 700,000 spent in all?
Absolutely. Let's review it. It's a case of the devil's in the detail with all this. If we've got a breakdown of all the costs, fixed asset register, anything like that, we can have a look at that, liaise with you and your accountant, see if anything at all has been claimed on, and we can analyze every pound. If things have been claimed on, analyze every pound to make sure that the claims are maximized. That sounds like there could be an opportunity there. That happy to take a look at that.
Great. Well, thank you. I think that's all we've got time for, and we've covered all the questions that were asked online. As I say, if there's any more that pop up that we haven't answered, we'll see if we can put that on the webinar, on our B&B Association webinar page, and in the follow-up email that you'll get if you've registered for this. And thank you very much, Jason, for a really informative session, which I hope has shown all our viewers that they might be able to benefit. And if you do want to take things further and see how your business could benefit, do contact Jason, mentioning the B&B Association, and Jason's contact details are on our webinars page as well. So finally, thank you all for joining us this morning, and do keep an eye out for our future webinars, including one on the hot topic of energy costs, which is coming up on the 30th of June. Details, as ever, are on the webinar page of the B&B Association's website. So thank you very much. Thanks, Jason. Thanks to everyone watching, and goodbye.